My name is Kimori Gathinji. I'm the head of investments at Stanbic Bank.
My name is Julius Orayo. I'm the Group Chief Information Officer for Jubilee Holdings.
My name is Joseph Rono. I work for CPF Financial Services Limited as a group executive director, oversighting around 3 subsidiary businesses, of course together with finance strategy and investments.
I know millennials are seen as a very unique group that I like to count myself as one of, but I think I may just not qualify given your strict definition. The staples of investing, or the traditional parts of the investment universe, has been, as you rightfully point out, stocks. Some people would say shares, just for ease of understanding. And then we have bonds. So those become like 2 engines in the traditional investing world. Now, why it's important to understand where we come from when talking about perhaps some of the emerging asset classes. Many asset classes are derived from those traditional asset classes. We are seeing a trend amongst millennials where they are, shall we say, more adventurous, more open to new and emerging asset classes. You've mentioned cryptocurrencies, you've mentioned NFTs or non-fungible tokens. And yes, we do see a slight boldness, if you like, to explore these new asset classes. They normally require slightly a more technologically savvy investor, and millennials are well suited to that.
So these are guys, when you look at them, they are mostly either in their first job or in their second jobs, for that particular matter, still at middle level management. So if you look at where they prioritize most, because when you look at these people, they are people who are mostly either starting their families, either they've just started their families, or of course they're in their first, second or third child. So if you look at what is very priority to these people, number one is a bit of stability in terms of the family. By, of course, many of them you'll find that they are driving. So one of their very preferential investments is perhaps maybe a car, for obvious reasons. Sometimes running a family without mobility becomes a bit difficult. So if you look at their highest priority, of course, they'll do that. But then now, a number of them, though a small percentage, will perhaps maybe want to go for the first mortgage to secure a home, which is very, very critical around that age. So many of them will invest in either buying a plot somewhere and maybe constructing. Many of them, of course, the second high priority area in terms of investment will be putting money in SACCOs. You find a number of them have really saved. Interestingly, most of these people no longer participate in the stock market. For example, I think they gave up on issues of shares, and they are no longer in that particular space. Of course, there is a new trend of investment in deposits, but of course, because of the requirements of quite a huge amount of money for you to participate in that space, most of them are also not there. Maybe apart from a few elitists and those ones who are already earning a lot of money.
The millennials want a fully digital experience. You know, they don't want to be given those big booklets for them to fill and, to go through a 20-page policy document, which has got some illegal jargon which they cannot understand. The other thing that the millennials need is through the digital experience, the same way, the easiness in purchasing, they also need the easiness in getting the service. So I want to access a doctor. I also want to go online, access a doctor through telemedicine. The other trend we are seeing from the millennials is on the flexibility in terms of the product offerings. You know, if you look at the traditional offerings, if you wanted a medical, you have to buy a whole medical kind of bouquet of things. You have to buy an inpatient, you have to buy outpatient, then you have to also get an outpatient, an optical, maternity. And when you look at that, you are even buying a maternity for a man who doesn't even need it completely. So they need an experience that is unique, personalized for their own needs. And then in that personalization, they also need flexibility in the product offering and flexibility in terms of payments. Remember, millennials don't have a lot of cash, so they need the cash flow that can be sustainable. So what they're doing is they want an experience that is also pocket friendly. Can I pay in installments? Can I pay for only the services that I require? It's one of the things. And can I pay not using the traditional checks? Can I pay via M-Pesa? Can I make a payment online? I don't have to leave my desk. I can do it from home, anytime at 3 a.m. when I want to. The other trend we are seeing from the millennium is more than insurance. So they are not just coming and saying, I'm looking for an inpatient cover so that if I get an accident, I'll be hospitalized and blah, 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 blah. They just need more than insurance. Can I get advisory services? Can I go online because of the policy I have? I can get additional advisory services. Can I get gym membership by virtue of having this particular product? Can I get discounts when I go for my shopping? If I have a career for education, career life of policy, can I also have discounts on the books I go to purchase? Can I get additional advisory services on careers for the kid that I'm taking to school? It's a policy that we have bought. So they want that kind of service more than insurance.
Yes, you do see that appetite for quick returns, but I want to be very careful, Bella. I don't want to distinguish myself too much or to criticize them as a group, because I think it's a uniqueness that they have. Yes, they are motivated, and I think it's a function of the economy that we live in today. Things are moving much faster. Back then, to go back 30 years to initiate a share transaction, and that's one of the things that we do for our clients here at Stanbic. To invest in shares, you probably needed to write a letter, sometimes take a journey. Before you had actually made the investment, you probably had spent 3-4 days trying to just facilitate that transaction. Today, you can do it on your phone. You can go onto the SBGS app and you will have invested within, say, maybe 5 minutes. Now, that's a kind of instant gratification if you think about it, that you've quickly done it. And it really does rhyme, I think, with the desire for quicker results. Now, to paint a balanced picture, though, investments is a long-term game. We call it a long game. It tends to favor those who spend time in the market, and we distinguish that from those who are looking to time the market. So to a certain extent, you do see a tendency amongst that group we're speaking about to try and time the market, to try and follow the trend. But increasingly, we're finding that the more savvy amongst them are realizing that the markets haven't changed just with the coming of a new generation, and it still does require some patience, and that's often the way you win.
Most of them are more short-term. In fact, the long-term investments they are doing are the ones where they are kind of compelled to do that. I'll give you an example. Contribution into a pension fund is more long-term. But if you look at most of the people who participate in pension contribution, they are mostly people who do that as a result of their employer having such an arrangement. In other words, your money is deducted at source, remitted directly to the pension fund. So they do that more or less like unconsciously. There are personal pension schemes in the market. If you look at these people, that will not be their priority. You rarely find them either walking into a pension fund and committing their monthly pay for purpose of securing their future, for example. So, and that incidentally then means most of them are short-term investors. There are people who will want to put money, for example, in a SACCO, because after 6 months or after 3 months, you qualify for a loan. So that is very short-term in nature.
What we're saying is millennials want cover for the time they need it, the majority of them. But there are also some who want to have a safety net, a long-term safety net. So I want to save because I want to buy a car. I want to save because I want to invest in real estate. So they'll go and buy a product that is going to sustain them for that long. I am planning to get married in 3 years' time. Can I save so that during that period I can have money for my wedding, I can have money for setting up a family, starting up my family and all that kind of stuff. So they are investing in that. But then we are seeing a trend where long-term investments, which used to be so marketable, attractive in the past for, the old people, pension savings, we are seeing that trend declining, where they are not looking at that kind of long-term trend. And I think it's an area that the government also needs to step in, because you can imagine if you are going to have a generation that does not have future savings, then it becomes the government burden in sustaining those particular persons when they grow old.